Hey y'all, it's your girl Pernicia Petit and I'm back here with another YouTube video. Let's go. Today I'm going to be going over how I mark up my charts when I trade NAS100, and that's usually the only one that I'm trading for real, but I just want to show y'all because a lot of people trade this. So in this video, I'll be going over how I find my zones, how I plan my entries, and I'll also be answering some of the most common questions that I get in my comments, like how do I pick my stop loss, how do I pick my take profit, how do I do risk management, stuff like that. So we're just gonna jump right into it, and if you guys have any additional questions that I didn't answer for y'all in this video, please comment below and make sure y'all subscribe and like to your girl because we just going up from here. Okay, so let's just get into it. Okay, so as you can see, we are on NAS100. You see it at the top left corner. There are 4 steps that I take when I'm trading and what I'm looking for specifically with supply and demand. So I trade NAS100 mainly, and I use the strategy supply and demand to enter on my trades and to know when I want to enter on my trades. And there are 4 steps that I take, and I'm gonna go through those 4 steps in this video. So the first step is when I wake up in the morning and I get up and I look at the charts, I'm trying to figure out what's the trend. That's step number 1. What's the trend? Now, how I find my trend, I look at the higher time frame. It gives me just confirmation of what's going on. So I start on my daily and I'm looking at that candlestick. Okay, it's red. I go to my 4-hour, green. I'd be a little confused at this point right now, but I just keep going. Green, green. Seeing how the daily is red, but the rest of them are green, 15 is red. Seeing how the daily is red, but the rest of them are green, I would still be trying to take buys, which is what I did because I took this trade that I'm about to show y'all. So I would be looking for buys. I would be looking for short-term buys though. Because the daily is red, my thinking would be like, okay, the overall trend right now is bearish because that's one of the strongest candles, the daily. So if that's red, the sellers are definitely trying to get in there. We just might be in a short-term reversal going up right now, and then we might start to go back down. So I'm looking for buys, but I'm looking for short-term buys, which just means I'm looking to take a quick trade. I'm already a scalp trader, so I'm in and out quick. But when it comes to short-term reversals, like quick. So I'm looking at my higher time frames, and sometimes I'm looking for like the nearest supply, the nearest demand. If the higher time frames are touching those supplies demand, just so I know that if I see some type of reaction, it's probably because of this. And it just helps me find the overall direction of the market and where it's trying to go. This tells me what side of the market I should even be thinking about. So after we find the trend, which with this, like I said, short-term buys. So we find the trend. Step 2, it needs to make a new high or a new low, depending on which way we decided the trend is going. Since I'm looking for buys, I'm looking for it to go up and make a new high. And that's just giving me even more confirmation that the buyers are still in there and they're still trying to make it move. That just gives us more confidence that, okay, we can slide in there. Once I know the direction, that's when I define my zones, supplies or demands. But in this case, we're looking for buys, so demands. At this point, I'm looking for the last down candle before a big push up, because that's gonna classify my demand, or vice versa. If I'm looking for supplies, I'm looking for the last up candle before the market starts to go down and make a new low, because that's gonna classify my supply zone. How I pick which zone is the strongest, it's just based off if it's most recent or not. If there's a zone and it's either been tapped a bunch of times or the market has created more zones after that zone was made, it's no longer the strongest zone. For me, the strongest zone is the most recent zone. And I'm also looking for structure breaks during this period as well, after I've already found the trend. So, and that structure break is it making a new high. So that's what I'm looking for after I find the trend. So that was the second step. Now the third step is I needed to come back and re-tap my zone. So looking back at the charts, so as you can see, the market is coming down just a little bit right here, but it's starting to break minor breaks of structure as it goes up here. So this high broke this high, that's a minor break of structure. This high broke this high, that's a minor break of structure. When they come up and break these highs, those are more larger breaks of structure. But right now, we got a small, minor, short-term, most likely uptrend going. So we're looking at it break highs going up. So now, after I've 1, found the trend, 2, it made a new high or a new low, depending on which way I'm looking. In my case, I'm looking for buys, so I'm looking for it to go up and make a new high. So boom, if I'm getting on the chart right here, right now, I'm starting for step one. Step one, find a trend, we found it. Step two, make a new high. Not this high that it just made. Yes, this high broke this high. We get that. But we're starting all the way from step one when we get on the charts. So after we find the trend, we're waiting for it to make another new high, not to use a previous high that it just broke. We're looking for it to make another new high. So let's play it. Let's wait. See what it does. Boom. So it came up and it made a new high now. I'm waiting for it to make a new high. It just made a new high because this candle broke this candle, which was the most recent high. So it broke that candle. That's a break of structure. It broke the structure and it continued to go up, which is just further confirming that the buyers are in there like swimwear. Do you hear me? So now I'm marking up my zone. This is when you mark up your zone. You should not be marking up your zone anytime before this. This is when you mark up your zone, when you get that confirmation. The way that you think it's going to go, you just got that confirmation that it's going to go that way. So now it going up and breaking structure, making that new high just gave me confirmation that the buyers are still in and that they want to keep going up. So now third step, I needed to come back and retest that exact zone. Why I needed to come back and retest that zone? Because the last time price was in this area, it had enough momentum to push up and make a whole new high. So now I wanted to come back down to the same zone and push up, make another new high, just like it did before, so I can get some profit. So this is when I mark up my zone. After step two, step one, find the trend. Step two, make a new high. Step three, come back and retest my zone. So now I'm marking up my zone so that I know what it's coming back to retest. Boom. This is my zone right here. It's okay. This zone's very freaking big. So in this trade, this zone is real big. Okay. This is where you manage risk, calculate your risk. This is where you do all that because this is a big zone. Okay. At this point, out of 4 rules, 3 has happened. We found the trend and made a new high, and now it's coming back to retest the zone. So let's watch and see what it does. Patience. You gotta have patience. The market moves in waves, so it's going to come back down eventually. It may not come back down when you want it to, but it will come back down or go back up, whichever way you're looking for. Boom. We got the tap. So now that's step 3. It came back and it retested our zone. Now, this is when I'm thinking about my entry. Now, how I determine how I'm going to enter is based on the market. So just, you see how this red candle came and it did not close in my zone? That classifies this trade as an A+ trade. That means the buyers are so in there and they're so strong and they have so much momentum that they're defending this zone that the sellers can't even close in that zone. So that just furthermore gives me confirmation that the buyers are in there. Now, when it comes to marking zones, this is where a lot of beginner traders mess up. Like, they just draw a zone and then they just enter just because price touched it. No, you're not entering on the tab. Wait for your breaker structure. Just because you have a zone now, that does not mean you need to hop in the trade. You still need to wait for your confirmation of entry, your breaker structure, your retest to the zone, a rejection wick, volume shifting. Like, you need to have that confirmation. Even though you now have your zone, that does not mean you need to enter the trade. You still need to wait for your confirmation of entry to happen so that you're not just taking random trades and you're not just hopping into stuff. This keeps you from taking those random trades. Okay, so we got the tap to the zone. A lot of traders, and I was like this myself, as soon as we got that tap, we're like, okay, we're in. But no, you have to wait. And this is where patience really shows itself. You have to wait, you have to be patient. You have to watch how that candle is reacting to that zone. Now, since we're in the replay on TradingView, obviously, we see that the candle did not close in that zone, but it did go in the zone. So that's why you have to wait and you have to watch and see what that candle does to see what type of entry you want to do. So with this particular trade, I can't necessarily remember how I entered, but let's play it and see what happens. Aggressive entry will be entering now at the top of that zone, or while that next candle after the tap is forming. Those are your aggressive entries. A conservative entry will be waiting for the candle after you get that tap, how this candle tapped right here, that next candle after this, once it closes. And if you're looking for buys, you're looking for it to close green. So once it closes, then you enter. That's a conservative entry. Now, say it taps, one candle taps, the second candle closes, and the third candle goes up and break the top of this candle, so it goes up and go higher than this candle or lower than this candle. That's a break of candle entry. So if we play this out, we got a strong green closure. Now, when you do conservative entries or break of the candle entries, you do tend to miss out on some trades with that, which is not the worst thing. It's better to miss out on a trade than to lose a trade. And it's also better to miss out on a trade than to enter on a trade and you don't even know why or how you entered on that trade. Like, you wouldn't be able to repeat it. You always need to enter trades that you know why you entered, how you entered, and you're able to repeat it again. If you enter a trade and you don't know why or how, you should never enter that trade, mama. So with this trade specifically, it's very possible you could have either missed the trade or it would have kept going up after this. Let's just say I got an aggressive on this candle, right? And because remember I said that aggressive entry is either getting in on that tap or the second candle that is forming after that tap. So when it was coming down into the zone, you could have very much well entered here. You could have. So let's just say we entered on this candle. Stop loss. A lot of people ask, how do I get my stop loss? Your stop loss should always be outside of the zone. Not way outside of the zone, but just a little bit outside of the zone. Because yes, there is a lot of market manipulation and liquidity grabs and all that stuff. You see it a lot where candles will go out of your zone just to take people out and then end up going your way. That can happen. However, most of the times when the candle goes outside of your zone, that just means that what you initially thought, the prediction that you initially made, it's not there. And it could be there, but just the wrong timing. It could take you out and then go up, and that's just how the market is. However, I would say a good 75 to 85% of the time, if the candle goes out of that zone and it invalidates the zone, they're just not in there, wherever you're looking. So if we're looking for buys and we got this demand set like how it's set here, and the sellers come down and invalidate my zone, the buyers just aren't in right now. And that's okay. I'd rather get taken out while it's invalidating the zone than to not have a stop loss and it just keeps going down, down, down. And I'm hoping that it's gonna go up eventually, but it just keeps going down, 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 down. So that's why I set my stop loss right outside the zone and right outside of the zone, because of the market manipulation. The market loves to come all the way in that zone and then reverse sometimes. So I'm giving my trade room to breathe. I'm giving it room to come down and draw down and go back up without taking me out. And I'm putting it right outside of my zone. When you're taking the 4 steps to enter a trade with using supply and demand, the third step is for it to come back and retest the zone. Why you don't enter on that candle tap is because the candles can very much well come down and invalidate that zone. And if it does invalidate the zone, then we're not entering on that trade. So if we're in a trade and it's coming down and invalidating the zone, we would want to be out of the trade, because if we weren't in a trade, we wouldn't even get in, right? Okay. So that's why my stop loss is always just a little bit outside of the zone. And then my TP, I usually always set like 2-in-1 risk to reward ratio, but 1-in-1 just to make sure I secure some profits. So I mark up my 1-in-1. I put it to 2-in-1 risk to reward ratio. So I'm risking 1 to make 2. So let's just say I'm risking 300 on this trade. I'm risking 300 to make 600, to put it into perspective. So say you got an aggressive. This is an aggressive entry. You would have already hit TP1 with the first candle. Cool. Peaches and cream. We love that. Let's let it keep going and see what happens. Patience, patience. TP2 smacked. And then how I decide my take profits, I'm always targeting the most recent high and a little bit above that. Because like I said earlier, when I'm finding my zones, it's because of a big push made from this area that was able to push up and make a new high. So I wanted to come back down and retest the same area and go push up and make another new high. So I'm targeting the most recent high and a little bit above that, just in case he comes up and make a high. But really, my main target is always the most recent highs. Just because I know price went there before, it could possibly go there again. And it went there before after reacting off of this same zone that I'm that I'm marking up now. So that's how I decide where my TP is. That's literally all it is. Now I do mark it up like this. I set my stop loss and then I do my 101 and 1 to 2, but my TP is always targeting the most recent highs. And then sometimes I make adjustments based on if I see it rejecting like crazy, or if I think the trend is about to reverse, or if the higher time frames are flipping and you know, it looks like this is about to flip too. Like that's when you can make different decisions. And this is one of the main questions I get on how I determine my stop loss and take profit. So that's why I wanted to answer that in this video. So my stop loss is always right under the zone or on top of the zone, depending on if you're looking for supplies or demands. And my take profit is just targeting the most recent high and clean new highs. A lot of beginners struggle with this as well because they just set random TPs and then they end up turning a winner trade to a loser trade. But if your markup is clean, your TP is literally built in the charts. Now, another question I get a lot is about risk management and how I calculate my loss, which I go over how I calculate my loss in my Q&A video that I posted a couple days ago. So if you are interested in that, definitely go check out that video. And someone was so kind enough to put the timestamps in the comments. So if that is what you're looking for specifically, just go check out that video, the Q&A, beginners Q&A / how I get ready for the new trading week. Go to the comments, look at the timestamp, and it'll take you to the exact time of when I explained it. I give the calculations and all that. That's why I don't want to go over it again. I'm sorry, y'all. But risk management. So a lot of the things that people will tell you, especially when it comes to funded accounts, that if your max drawdown, which means this is the most that you can lose or you'll lose your account, your max drawdown on Top Step is always typically around 2,000. When you're on the eval / combine, which is the thing that you have to pass in order to get the funded account, your max drawdown is 2,000. You cannot lose more than 2,000 or they will take your whole account away and you have to start it all the way over. So with your drawdown being 2,000, with your max drawdown being 2,000, they say not to risk any more than $200 a day. I'm a little hard-headed. I don't listen. My max a day is like 500. Is that a good idea? Probably not. But I tend to make more profit when I win trades than how much I lose when I lose trades. So it kind of works out for me, but that's the main goal that you guys have to keep in mind. Your green days should always be more than your red days. That's how you become a profitable trader. Well, one of the ways you become a profitable trader. And on most funded accounts, specifically on Top Step though, because that's what I use, they have a daily max limit that you can set, like a daily max loss limit that you can set. Your daily max loss amount should never be anywhere over 1 to 2% of your full account balance. Like I said, I'm a little hard-headed. So mine is 500, which is a little bit more than 1 to 2%. But when I first started, I was doing it the 1 to 2%. Okay, so if you are just starting, I started like 6 months ago. If you were just starting, I would highly recommend doing 1% of your account so that you don't blow your whole account in one trade. Now, when it comes to my evals though, the combines, the test that you have to do before you get the funded account, I do only risk like 200 to 300. I don't play about them evals. I just be trying to get them passed and not lose them or whatever. But when I'm on my live account, I do risk up to like $500. I gotta be honest. Cause like, yes, you can make as much when you just trailing your stop loss and the market is going up, or trailing and the market is going down, but you gotta risk big to make big. So I'm not having these $1,500 days by risking 200. I'm just not. Another question I keep getting is what broker that I use for my live personal account, and then what prop firm that I use for my funded account. And for my live personal funded account, I use a webpage called Hanko, Hanko. And they let you have those loss sizes where it's like 0.10, 0.07, all that good stuff. And then for my funded account, I use Top Step. And I like them. No complaints over here, to be honest. But for beginners with very small capital, me personally, prop firms are just the easiest because they're giving you capital to trade with. You just got to prove that you're a disciplined trader and that you can be consistent, which can take a while, but I promise you, you'll get there. You got this. If I could do it, y'all can do it. Now, funded accounts are strict. Like I said, you have to prove that you can be a disciplined, consistent trader. They are strict, but they do get you in that right, like, it's kind of a bittersweet thing with Top Step, or it's kind of a bittersweet thing with prop firms, because on one hand, they're teaching you that you need to be disciplined, they're teaching you need to be consistent, and that you need to have good risk management, but they're also teaching you that you can just blow an account and buy a new one for $50. So, you know, a live personal account compared to a prop firm, they cater to different things when it comes to your trading journey. So for me, the prop firms helped with my discipline, my psychology, my consistency. It helped with that. And it also helped with a little bit of risk management, just a little bit. But my live personal account taught me how to handle my emotions when it comes to trade, because that's my real hard-earned money that I worked hard for. So they just teach you two different things. But if you're new, start slow, focus on consistency. That should be your main goal. And then just a little insight of what I would recommend if you are starting to day trade. Step 1, pick your market. NAS100, gold, silver, whatever. 2 would be to pick your strategy. So supply and demand, support and resistance, break and retest, whatever it is that you want to use to give you that confirmation and to help you determine the trend. And then learn structure. So learn how to mark up your zones, learn how to find the trend. And then step 3 would be to back test these things. So once you learn them, back test them. So just how I was on TradingView and I was back testing, do that. Just back test one simple setup. Step 4 would be to just mark up charts daily without entering. So for like however long you think you need it, because I really feel like it's just different for everybody. So every day, get up, go on the charts, mark it up, do what you got to do. You can get off the charts, go back, whatever, see if it hit, see if it didn't. Like, just mark up your chart so you get in a gist of having clean setups and clean markings on your chart. Step 5 would be to paper trade until you are consistent. So me personally, I paper traded for like 2 weeks, but like I said, everybody is different. You paper trade for however long you need to in order to feel confident when it comes to actually entering, and confident in yourself and knowing what you're doing and trusting your strategy. And then step 6 would be to either move to a small live personal account or start with the prop firm, whatever you feel is more better for you. And step 7 would be to journal everything. Emotions, reasonings, why you entered a trade, when you enter a trade, did you follow your rules, what are your rules, all that. Journal it all. Everything I showed y'all today, the structure, the patience, it came from me rebuilding my discipline. That was the only way I started to actually make profits from trading. I had to like just take a step back and really just learn the basics when it came to trading, like how to mark up zones, the psychology part of it, like the little stuff that we don't think about and that we kind of brush past because we're just like, oh, I'll figure this out later. I had to take a step back and just reevaluate all that. I struggled with the same thing that most beginner traders do because I'm still a beginner myself when it came to like overtrading, over leveraging, being emotional, FOMO, feeling all that stuff. That's why I was losing a lot of my trades and blowing my account. So if you're like me currently now and you struggle with stuff like overtrading, forcing trades, confusion, or emotions, my trader's journal and my 5-day reset will help you get organized and stable. And that's stamped. The links are right there in the description. And y'all don't have to use the journal that I use to journal. Y'all just need to journal. That's it for today, y'all. I hope y'all enjoyed the video. I'm dropping another one tomorrow, so be ready. I don't know what tomorrow's gonna be, but we'll see. I kind of just be planning these videos the day of, and then I record it and then just post it. So yeah, thank y'all so much for the support that y'all have been showing. Like, it's really like, I don't know, I love it. Thank you, God, for everything that you've done for me. I'm so happy and I'm so excited for my growth and everybody else's growth that's watching me along with this journey. At first, I'm just like, okay, I'm just gonna press my journey, whatever happens, happens. But the fact that I'm actually inspiring people and people are actually learning from me, I felt like I sucked at teaching. And then I looked at all my videos, I was like, girl, you're literally teaching on all these videos. So now I'm like, okay, your girl's locked in. Please comment any more questions that y'all have. I'll make some actual dedicated videos to certain questions based on how long the explanation is, but I'm gonna just try to throw answers in each video of questions that y'all be asking the most, okay? Make sure y'all subscribe to your girl. I'm not playing. Don't play with me. Don't play with me. Don't watch this video and not subscribe. Make sure y'all like this video and make sure y'all comment and let me know what y'all want to see next. I'm dropping videos after videos after videos, and yeah, have a great night, y'all. Peace, love, and chicken grease.